We are making this video to help give some mathematical analysis on the price and supply of Safemoon to help us give some hints at what we are likely to see in the future. To start with, there are too many incorrect theories going around as to how Safemoon burns and reflections work, and how and when the tax is applied. Welcome to another episode of Crypto Facts. We are giving away $25 at the end of the month to one of our random subscribers to start their crypto journey. All you need to do is like the video, subscribe, and comment on your favorite crypto coin in the comment section below. It helps you get notified when we post more content just like this. Let's review one of Safeway's primary functions, and that is the transfer function. To start with, there is no difference between a buy, a sell, or a transfer on the blockchain. There's only transferring from one wallet to another. What users and people consider to be buying is transferring from an exchange wallet to a personal wallet. And what users consider to be selling is the opposite. A transfer from a personal wallet back to an exchange like PancakeSwap or Bitmart. Every time this transfer function is called, there's 10% tax taken out of that initial transaction. For example, if Rita gives Johns $100 in Safemoon, John would only receive 90, and that 10 which he does not receive gets broken up and split into two halves. $5 or 5% of that gets sent to the liquidity, and the other $5, which is the 5% of the transaction, is split up amongst all of the holders. We refer to this split up as the reflections, and that's what we'll be diving deeper into. The wallet here, known as a burn wallet, does not have a private key associated with it, and for people new to cryptography or blockchain, it just basically makes it impossible to even access those funds or send them anywhere else. This wallet can't be hacked because hackers cannot track it, as it is your private key, and this wallet has no private key either. That's the end of it, but this burn wallet does not count as a holder, so it also gets a share of their reflections, which is critical. Almost half of the time of making this video, the burn wallet has 416 trillion tokens in it, which are 41.6 of the entire supply of 1 quadrillion Safemoon. A common misconception is that more holders we have, the fewer reflections we receive. This would only be true if the reflections we received were the same and never changed from holder to holder. The bigger of a bag you have, the more Safemoon you are rewarded with. Since the burn wallet owns 41.6% of the supply, it will burn 41.6 of our reflections, or $2.8 out of that $5, which was the split up of Rita's gift to John. Our top whale, for instance, owned 27 trillion tokens. He has 2.7% of the supply of Safemoon, so he will receive 2.7% of $5 or $0.14 out of that transaction. This certainly means that the burnt wallet, like everyone else's wallet, is getting bigger over time. Relatively soon, the burn wallet is going to have 990 trillion tokens in it, and they'll be burning 99 of every reflection. That will leave us, our Safemoon army, with only 1% out of the 5% we once loved. The reflections we receive will not change or slow down. The reflections you receive, two things, and two factors only: the volume and the number of Safemoon you own. As long as you don't sell, your reflections in the US dollar will only grow as long as the volume grows or stay constant, because your Safemoon bag is consistently increasing. What changes is the reflections in Safemoon tokens themselves, and this is due to the price of Safemoon at each given moment during any transaction. The value in US dollar will stay the same or increase, but the arbitrary number of Safemoon you receive will change depending on the price, whether you receive 1 million today or 200,000 the next day. That's based on the price and volume. Your market share is described as the percent of the total supply you own, and total supply and not the circulating supply is 1 quadrillion. The market share of the burn wallet is again 41.6% because it owns 416 trillion out of the 1 quadrillion tokens. So, to calculate your market share, you take the number of Safemoon you own and you divide by 1 quadrillion. So, if you want to calculate how and what your reflections would be given it under a given volume and a given number of SafeMoon, it can be calculated as follows. You take 5% of the volume, and that is 0.05 times volume times your market share. And your market share, you can rewrite it as a number of SafeMoon you have divided by 1 quadrillion. So that gives us a neat equation reflection that equals 0.05 times SafeMoon times volume divided by 1 quadrillion. Now remember, this is the same exact equations we have used for the burn wallet. We apply this to every transaction that occurs on the SafeMoon contract. Let's rewrite this a little bit. Let's put that 0.05 into the denominator, and we have a much nicer equations of reflections equal number volume times. SafeMoon divided by 20 quadrillions, 2 with 16 zeros by rewriting the denominator. We can see that reflections are nothing more than volume times. SafeMoon multiplied by a constant 1 over 20 quadrillion, that part doesn't change. But what's beautiful about this, it tells us exactly what we need to know. It shows the direct linear relationship between reflections volume and SafeMoon. If an investor have 1 billion coins and the daily volume is $15 million, he can get $2.5. How many SafeMoon is this? Well, that depends on the price. Let's divide our answer by the current price of SafeMoon at the time of writing. It is 5 zeros with 5 at the end of our $2.5. Is 500,000 SafeMoon or 500,000 SafeMoon. If you have a billion SafeMoon and the daily volume is $50 million, you should expect to see 500,000 SafeMoon at this current price, which is about right. The whales with 1 trillion coins are earning $50,000 per day just for holding per trillion, which is $1 million per day. If it reaches Doge level per trillion coins, our top whale would be making $27 million per day, and that's why he has held through this thick and thin. He has over $200 million in SafeMoon. He just kept on holding because he knows this smart money's value has been realized by the public. They have started realizing how much of a hidden gem this is, and in future, there will be no stopping the demand for SafeMoon, and that's when we'll see these exponential gains. You should stock up now because once the price does explode, getting these millions or billions of SafeMoon won't be achievable anymore unless you're already filthy rich. Right now, it's only like $8,000 or $7,000 for a billion SafeMoon, and we don't think it's going to explode. So quickly, let us get over our honest price predictions for SafeMoon. But before we give our predictions, we would like to explain the market cap quickly. The market cap is a term to use to describe the valuations of something that the entire market is worth for a particular asset. This value for cryptocurrency is calculated by multiplying the number of coins in circulations by the existing price, giving you a total value of what all SafeMoon coins, for instance, would be worth collectively. The coin's price is likely to rebound and trend higher in the coming years, although its value could remain at the fraction of a cent, according to the SafeMoon coin prediction from Digital Coin. The forecast from the site predicts the price will average $0.000000504 this year, rising to an average of $0.000000606 in 2022 and $0.0001025 by 2025. By 2028, the price could rise to a new peak and average $0.0001491 according to the forecast. Do you have any further questions? With all this information, would you still hold or buy SafeMoon coins? Let me know in the comment section below. We have got 2 more videos waiting for you at the screen to check out. Don't forget to give this video a thumbs up today and subscribe to our channel to get us 5,000 subscribers for weekly content like this. Thank you for watching, and make sure you watch the next one too, because it's going to be a mind-boggling video. Bye-bye.